We're here at REIT Week 2010 in Chicago, and I'm joined by Ronald Bowler, Director with NYSE Euronext. You know, it wasn't that long ago that there were concerns that potentially companies could be looking abroad to list their companies as opposed to going to the NYSE. Do you think that these concerns have been assuaged?
Well, with the passage of Sarbanes-Oxley a few years back, that was the case in the beginning. Companies were somewhat reluctant to test the U.S. equity markets. There were fears of the heightened regulatory environment, possibly the increased fees. Now, as the years have passed, we have seen that overseas markets, India, China, the European markets, have provided them with other eligible sources that they can list their issuances on, with deep pools of liquidity similar to what we offer. With that being said, Sarbanes-Oxley regulation has seen some changes over the years. And we have seen foreign issuances looking to tap into the U.S. markets.
And what kind of IPO activity do you see percolating within the market?
This year, the NYSE has seen 29 initial public offerings. That is across all industries, totaling $5.7 billion in proceeds. Of those 29, 5 were REIT IPOs, and they account for almost $1 billion of that $5.7 billion. In addition, looking forward, we've had 9 REITs file for IPOs this year, and they're looking to raise an additional $3.3 billion going forward. It is also worth noting that out of these 9 slated to come to market, and the 5 that have listed, all have chosen the New York Stock Exchange as the venue of choice for their listing.
And when it comes to commercial real estate investment, what kind of sense do you get from investors regarding public markets versus private?
I see the public vehicles as being more transparent. It definitely helps the investment community to make more educated decisions when they're choosing stocks to purchase or sell. You also have the benefit of a deep secondary market in the event you want to liquidate a holding or increase your shareholdings, and it helps you to move in and out of them at an easier rate. We also have, moving forward on the private side or the non-listed side, the potential for increased scrutiny from FINRA regarding their marketing practices, some of their valuation etiquette, and also the transparency issues that we had spoken about earlier.
And you mentioned FINRA. How do you see the regulatory environment and potential changes there impacting the NYSE going forward?
I don't see a tremendous impact on our day-to-day trading operations from the financial regulatory standpoint. From the trading regulation standpoint, again, we have certain trading restrictions in place and things that help the trading communities. We are very happy to see that the SEC has moved forward as quickly as they have regarding the recent market events, and moving forward putting in different stock-by-stock circuit breakers and things of that sort to help protect the investment community. And we think that ultimately this is going to protect the individual investors in the long run.
All right. Well, thank you very much for joining us. For more information on this and other REIT news and analysis, check out REIT.com.